What's going on, guys? Today we just received PPI. This is Producer Price Index. Tomorrow is going to be CPI. And I would say we definitely got some favorable numbers. And the market is reacting all right to this news. Some of the safer stocks you can see are red, whereas a lot of the more risk on is actually green today. And Bitcoin miners saw a fantastic day yesterday, and it's the same thing today. Here beside me is WGMI ETF. This is the heat map for it. And if you want exposure to the Bitcoin miners, I would say it's late in the cycle to do so. But if you're racking your brain about which Bitcoin miner you want to acquire, which Bitcoin miner you want to add into, DCA into, so on and so forth, I think WGMI is a good pick. It takes a lot of the thought out of it, and it does give you some exposure to the Bitcoin miner sector, along with some AI plays, chip stocks, Nvidia's in there. But yeah, WGMI recently has been doing pretty fantastic. In the last 5 days, it's up 13%. You don't need to pick an individual stock to see some nice gains by getting into an ETF like WGMI. And it also gives you the ability to take a more relaxed approach on the Bitcoin mining sector. You don't have to look at news as it comes out and judge each Bitcoin miner. You can just get some general exposure with WGMI, add a little bit every month, whatever you want to do, and go about your life and enjoy life. Now PPI, it came in under its forecast. This is a good sign. The market will be closely watching CPI tomorrow. This is our last inflation data point before the Fed meeting next week. Now, while a 2.6% read for PPI is definitely still a ways away from the Fed's target of 2%, it is much better than the forecast. It is also much better than the previous month. And this is a very good sign. While the market is very uncertain about tariffs and other inflationary pressures, seeing PPI come in under expectations definitely gives the Fed some leeway for some cuts in the future. And the fact that we got such big revisions to jobs numbers, some of the worst since the financial crisis of 2008, while seeing inflation data points like PPI not leading us to think that we might see stagflation, this is definitely a good sign for cuts. Seeing inflation come down while the Fed is basically being forced into cutting, well, that's what we want to see. We don't want to see poor jobs, inflation rising, and the Fed still being forced to cut, potentially making inflation a messy beast to tangle in the future. And this decent inflation news has brought a 50 basis point cut back to a 10% chance. It is on the table, although it is still highly unlikely. But what is likely is a rate cut to the tune of 25 basis points. Leaving rates current isn't even on the table, and it hasn't been for a while, even before this PPI news dropped. But what this PPI news did do, it did give a slightly higher probability of a 50 basis point cut. And next will be CPI. If this also comes in favorably, just like PPI did, the likelihood of a 50 basis point could come towards 20% or a 1 in 5 chance. But I do think the 25 basis point is the most likely outcome. The Fed doesn't want to go too aggressive while inflation isn't at their 2% target. Despite some certain people calling him too late Powell, I think him waiting until we are here at this point now was the proper move. Now CPI, we do have a forecast of 2.9%. If this comes in under this will be fantastic news. If it can come in lower to the extent that PPI did, this could come in under our August and July read of 2.7%. I think the market will be pleased just to see it come anywhere between 2.7 and 2.9, as long as it isn't above 2.9% and reaches that 3% range. The market will be pleased. The Fed can be somewhat dovish, and we can start getting these rate cuts to end the year, which should continue to help these risk on assets, the riskier stocks, the small caps, those that need to acquire debt, take out loans at high interest rates, but that can then refinance or take future loans at a lower rate. Now, what some people are saying is tomorrow's CPI will carry more weight, but today's PPI print rolled out the red carpet for a Fed cut next week. The Fed was already likely to cut next week regardless of PPI. The Fed Watch tool hasn't seen any probability of leaving rates current for a couple days now, up to maybe a week or two, but I digress. After last week's job report, though, the market was already expecting the Fed to begin an easing cycle, so it remains to be seen how much of a near-term impact this will have on sentiment. The worst-case scenario on inflation isn't playing out. The doves will be happy to see the year-over-year numbers back below 3%. Combined with the weak job data recently, this keeps us on track for rate cuts. However, the speed and intensity might depend more on the big consumer index tomorrow, CPI. PPI's inflationary pressure appears to be muted overall. We see nothing in the report or its implications for core PCE that would dissuade Fed officials from cutting 25 basis points in September and proceeding to cut another 25 basis point at each upcoming policy meeting. Before we look at Bitcoin on the shorter term, on the closer time frames, let me ask you this. Do you think September will actually see a green month for Bitcoin? This will be the first good September on a peak year, 2025. 2021, 2017, 2013. These are all peak years, and all peak years in the past have seen a red September, and then we see a very strong finish. Look at this here. This September we saw a flash crash in the 2013 cycle, the 2013 peak. A flash crash down to $86, $90, whatever. I mean, just think about that price. That's insane, as a side note. And then we ended at 1,150 just about. Again, 2017 peak. We saw a flash crash in September. And then we saw things end at about $20,000 before the cycle repeated. In the 2021 top, we saw a crash in September down to the 50 MA on the weekly. Brought it down to 40,000, and then the market ended it at about $70,000, or nearly double, almost double. So far this September has been quite different. September has actually started off very strong. We actually bottomed out here in the end of August at about 107,000, and now Bitcoin is testing its 50 MA here. You can see it kind of got rejected on it. We might be coming for a retest. We did just break our previous resistance we were talking about here at about 112,000, 113,000. If it can flip this resistance as a support, I do think we're going to test our 50 MA again, and that's going to be our chance to break out and head to that 130,000 that I was talking about. Although I am cautiously optimistic, you know, this is a September, maybe things just break under this trend line, come down, test this trend line. If that breaks, we might test 200 MA, see a sort of a flash crash like we have seen every cycle. I am anticipating it. I am not hoping for it, but I know that it's on the table. It's possible. So far, so good with Bitcoin in September. And you also have to ask yourself, you know, in September, if we have a fantastic September that brings us to 130, does that change how the cycles have always ran at the very end of the year? Do we see a correction in a future month instead of September? Some things about this cycle are definitely different than last cycles before it. I do want to remind you guys that Bitcoin balance on exchanges is continuing to drop. We've got companies like MicroStrategy, other much smaller companies also acquiring Bitcoin. We've got these spot ETFs continuing to take Bitcoin off the market, continuing to add to their assets under management. A lot of this Bitcoin is going to stay in these ETFs. And a lot of the people investing in these ETFs want to hold Bitcoin for 10 years, want to just make it like 5-10% of their portfolio, set it and forget it, slowly DCA into it over the rest of their investment career. Bitcoin is continually hitting new lows on exchanges. As we get through future cycles, Bitcoin becomes more and more scarce. It becomes more costly to mine. The price increases to make up for it. Let me remind you that the vast majority of Bitcoin is already in circulation. We are fighting for the last few percent over the rest of Bitcoin's issuance schedule. Everybody needs some Bitcoin in their life. Thanks as always for watching, guys. How do you feel about PPI? What are you thinking about CPI tomorrow? Is the Fed going to cut 25 basis points or 50? Be cautious with the Bitcoin miners. You don't want to necessarily be piling into them on 20-25% days. You want to be adding to them when they are not in favor, when people don't want them. Don't be the people buying the tops. Of course, it's easier said than done, but you have to change your mindset. You have to buy when there is max fear, when people are worried, when people feel like the Bitcoin miners are horrible. That's when you want to be buying, not after they have already run, not after everyone is talking about them. For example, Iron has done a 30x this cycle from its crypto winter low, and now suddenly retail is so interested in it and so bullish on it. Where were they under $5? But anyways, my point is be cautious, have an exit plan, have an entry plan. Don't pile in at the tops. Don't pile in on hype. Bitcoin is always a DCA regardless what people say. Thanks as always for watching, and I will see you on the next one.